Eric Mwale, Mwale.com, with a weekend world market analysis for the weekend of January 30th and January 31st, 2016. Let's take a look at how Asian markets closed. We can see pretty much nice gain for the markets, 2-3% for the most part in most of the markets. So that's the close in Asia. Take a look at European markets, which also closed very well on Friday. And we can see here the close also up about 1-2%. Good gains into the close of Friday. Let's take a look at the Americas as of right now. You see that Brazil is up 4%. Nice gain there. Argentina is up 2%. So let's call it 1-3% gains. And right now the US market, with about 3 hours to go before the close, US markets are trading well, up 1.7 on the Dow, Nasdaq 1.4, S&P 500 is up about 1.6. Crude oil is up 1%. So let's take a look at the world markets. Let's take a look at the long-term picture for the Australian market. What we're going to do is take the monthly closing high here, monthly closing low, and this chart goes back to 2013, and then take the monthly closing low here, somewhere around there. We can draw a straight line from there, which should be something like that. And you can see that right now we closed above that trend line on a long-term trend line view. So as long as the market is holding above this, the Australian market is holding above this trend line, then the market might have a chance of moving higher, but it needs to hold. Otherwise, if it does go on to break again, like it was for the month of August, if it breaks that trend line again, then we are still faced with the potential for lower prices. The reason why I say that is because right now we are still showing, we came close to closing above that previous monthly closing low, and the level that we broke through in January was 58.60. So anything still holding below 50.58, which was this monthly closing low, the monthly closing low for 2015, anything below that, still the market might have a chance of trading lower. Of course, if we can recapture that previous break level, then the market is really repairing this chart. Keep in mind that we might still have to face the possibility of making additional fresh lows on the monthly RSI, and also we can see that the MACDs are still trading at 3-year lows. So the risk is still there, with a chance that now the market can build after coming off the lows of January, excuse me. So here it needs to recapture this level here at 5,058 if it is going to start recovering. Anything still holding below that, and the market continues to be looking like it might still see some downside. Next, let's take a look at the Chinese market. And what we're going to do here is go to a long-term monthly view. So let's go back on a monthly chart, and want to take a look at let's go about 13 years. So 13 years monthly, and want to show you what I think is probably taking place here. Is we had a nice breakout here in 2014. That breakout pushed the market higher for a nice gain. So this breakout began a nice move here that the market responded very well. And I think what's going on here is, if you take this entry on the RSI there and draw a line, I think the market is pulling back to come and test the RSI breakout level. So here, if it can hold on a month-to-month basis, then that's where it might start bouncing, in my opinion. If we take a look at the South Korean market, the KOSPI, we can see here that if you take the intraday lows, this is 5 years weekly, and we can see that if you take the intraday lows as of this past 2 weeks, we came and tagged that line there. So the trend line there seems to be holding. So the price seems to be holding, which is a sign of support for now. Also, we see that there's a line that it has been bouncing on this line here, weekly RSI support, going back a couple of years. Ever since the lows here, market's been using this to find some weekly closing lows. So all these have been nice intraday or nice weekly closing lows, and here also in 2015 for that weekly closing low. for a nice swing trade to the upside. So right now we are seeing also another instant where the market has found support on that green line. So that's good for now. That could be something the market could build on. Take a look at the line connecting RSI lows on the weekly. You can also see that they connect very nicely with the lows here, close to that low, and then close to touching that low, and the low here, and then now here. So again, we see the weekly looks good in terms of that support. And so as long as the market can hold support on the weekly RSI, also the line connecting the lows, and again the intraday lows going back a couple of years, as long as all those points are holding, the market has a chance of building maybe sideways and see whether it can find some stability. Now if you take a look at the daily, we can see that there's a challenge here on the daily, and it's a simple consideration here. As long as if you take the highs on the daily RSI and extend the line, you can see right now it's coming back to test this line here. So as long as it stays below this trend line, then we can see that maybe now the next swing trade is lower. For this market to move higher, it needs to take out this RSI resistance line, something it hasn't done yet. So for now, we can still wait and see whether there's enough strength to take out that line. Otherwise, resistance on this line suggests that the next swing trade is lower. Let's take a look at the Japanese market, and we can see here clearly what we need to watch for in the next month is whether it can bounce back above 50, and that's going to be key. I think anything above 50 on any of the major markets might suggest that markets are truly in a rebound mode. So watch the RSI 50 level on the monthly, because if we bounce back above that, something like that, anything back above 50 would suggest that this is as much as we are going lower, and the next big trade is going to be to the upside. If you take a look at a longer term picture, let's take a look at a longer term picture here. I'll show you a couple of examples where the 50 RSI level on the monthly comes into play. For example, just take a look at this area here in 97, 98 for the highs there, and then we can see double bottom support at the 50 level for the lows here. And recently also we can see resistance here in 2010 for the highs there, resistance here in 2011 for the highs there, and resistance here in 2012 for the highs early on in 2012. So clearly we can see that the market does use the 50 to gauge the next type of multi-month move. So back above 50 is good. Otherwise, if it stays below 50 on a monthly chart, then the market still has some downside pressure. Speaking of a long-term view, let's take a look at the Indian market by way of the Nifty. And again, we can see here that since 2012, the market has been using support at the 50 for re-entry. So support here in 2012 at the 50 RSI level for the lows there. Support here in 2013 for the lows there. So this has been perfect timing. So here we have an opportunity to watch and see what happens. Clearly, if the market, and it's a big if the market can move back above 50 in this coming month or months, then if it does move above 50, then we know that the market is poised for a multi-month rally. Now, if you take a look at the monthly chart, 3 years worth of monthly data, you can see that the risk continues to be to the downside as of right now, with a chance of the market moving above 50. So until we see the market move above 50, and we have to see that so we can act on it, so we have to see this bounce above 50, which would be good for market bulls. But the problem is right now we are still faced with a market that is trading at 3-year lows. So if we don't recover, don't forget that the backdrop of what's going on here is that we are still trading at 3-year lows as of this past month on the RSI, and also the MACD is below 0 and also at 3-year lows. So the risk is still there on the chart until we see the market post a positive gain for the month. Now if you take a look at a weekly chart and go back about 5 years, so let's do that. I discussed this over the last market analysis video last weekend. If you go back 5 years on a weekly chart, you can see that coming off the lows of 2011, early 2012, if you draw a line from there, so this was where the market broke out of a range somewhere about there, and that entry brought the market off the lows there. And since then, of course, we know the market went on a major run. So if we draw a line from there, as we discussed over the last couple of weeks, this is where the market might actually be trying its best to find stability. As you can see, it makes a lot of sense if the market is going to move higher for this to hold, because we see here support off the lows here, came close to the line here, support for multi-week rally, support here for some major short-term lows, and also here we see that support here for multi-week rally. So here we are seeing another support on last week's action. So if the market continues building on this, this is good and the market might move higher. Take a look at a weekly chart, 2-year weekly, and we can also see that short term we are making lower lows while the RSI showing an improvement. That's positive divergence. Here the market clearly has a chance of moving higher. If we take a look at the daily, we had discussed the idea that the market was showing this nice improvement in RSI action. It was making slight higher lows. So here we see support while prices were making lower lows. So I think you can now see that this was good enough to generate enough energy over the last week or so for the market to move higher. The problem here is if you take a look at the hourly, you can see that it is coming back to test the most recent breakpoint of late December. So you can see that the break took place here. That RSI break was good enough to bring the market from these levels. Clearly we coiled it lower, and so we are coming back to test that line. And if the market cannot move above that, that's where we closed on Friday. If we can't move above that, then we can assume that the beginning of the week, the market is going to have to start the week and the month of February with a little bit of a pullback. But again, the main thing to watch in my opinion is whether we can move above 50. So closing here at 47 for the next month, if it can recapture that 50 level, then that's your key and your signal that the market has intentions of moving higher from current levels. And without recapturing the 50 RSI level on the monthly, chances are we continue to grind lower. Let's take a look at the South African market stock exchange by way of the Dow Jones Index. So the South African market here made a new low on a weekly basis about 3 weeks ago, but we see that the RSI showed some improvement, and because of that we are seeing it stage a nice move this week due to that positive divergence. So it looks okay on the monthly, just like the Indian market. Here is what needs to be the key here. If we can close below 50 this month, this January, at the end of the January, which is the next couple of hours, and if we can move back above 50, that movement back above 50 would suggest that this is where you'd want to see the market hold, and also the market would have to have a chance of moving higher. So if we move back above 50, chances are market recovers. If we stay below 50, then this is just a market that is playing around, and eventually, because we might still be looking at markets making fresh 3-year lows, and we know that this has been a problem this past month as markets made fresh 3-year lows, as MACDs moved to fresh 3-year lows. This market was actually trading much lower. So the risk remains that if we don't see a recovery immediately and we stay below 50, that these monthly charts take hold and we continue to see lower prices. Otherwise, anybody wanting to play long, there's a chance that the market might hold the 50 level, which is critical, and a bounce back above 50 gives the market a reason to bounce, and bounce with some kind of authority. And now, because the market always wants to complicate things, if we take a look at the daily, we can see the daily is coming back, and we're going to see this also shown on the Canadian market. You can see here this was a recent break in November, and the market's been down substantially since then, and so that break level is what, in my opinion, is being tested right now. So yes, it's doing well, coming back to test this red line. This red line has been a problem for quite a while. Resistance here for the highs there. Resistance here, it touched that with uniform activity for the highs there. And now we are trading back at that line. If we do end up showing uniform activity rejection around here, then that would suggest that the next swing trade is lower. Now if we can test this red line and go backwards, just a little bit backwards, you can see that it makes sense because the break here gave us the 52-week high. And also we can see that this resistance here gave us this high here, which is off those two highs. So this has been a problem for this chart, and the fact that it's coming back to test the same line might suggest that if we can't hold above this red line, the next swing trade is still gonna be lower. If we take a look at the Nigerian market by way of the ETF that trades in the US, NGE, and I don't know how reliable this ETF is, so ETF sometimes can have the wrong representation of a market, but we can see here, as long as the RSI on the monthly is below 30.9, as we've been saying, this market continues to be under downside pressure. If we take a look at the FTSE, we can see here that the London Financial Times index, recently we had made fresh weekly lows, but the RSI did show an improvement, and we've had a nice gain this week, up about 3% because of that positive divergence, which is good. Now if we take a look at the daily, we can see that this is something that we see across many markets, is we're coming back to test recent resistance levels. Number one, we are testing a declining 50-day moving average, so that might be a problem. The last time we struggled to hold the 50-day moving average was here for the highs there. And also we can see that the RSI on the daily is showing that if you take the 52-week daily highs or 52-week daily chart highs on the RSI, as of Friday's close, we came back to test that line there. So clearly, if the market wants to move higher, it needs to take out that line to the upside. Otherwise, this might become resistance and another short-term high. Also, there's another line that connects going back somewhere around here. I'll just draw it somewhere there. This line has been a problem. As you can see, the last two highs here came on this red line, double top here for the highs there. And so we are seeing that the market is coming back precisely to test that level. Either we can break out and move higher, or if we show resistance, then the next swing trade is also still going to be to the downside. Take a look at the hourly, and the hourly is coming back. If we can take a look at where the break took place, so the break took place here in early December of the highs there. We draw a line from there. It should be something like that. Now this line happens to be close to about 61.8 thereabouts, roughly. And we can also see that this was also a break level. Again, we broke through that red line and the trend there, trend line for the highs there, which is the beginning part of 2016. Of course, we know that we've been down since then, and now we are coming back to test that same line. So depending on whether we can move above the red line or not, if we can move above the red line, then that suggests that now the market has enough energy to continue adding on to recent gains. Otherwise, if we can't move above that red line, then of course the next movement is going to be resistance confirmed and the market trending lower. And the level there was 6,061.61. So we did close above that. Now the risk continues to be that if in the coming month or months, if we still go on to break below 60.61, then we are back to what happened here. The risk continues to be that we might have to redo this again. So we need to hold above 60.61 if the market is truly to bounce. Otherwise, like other markets, the risk continues to be that the monthly RSI and MACDs don't look great. So we are still seeing that as of right now, the RSI could easily move back to 3-year lows, and the MACD could continue trading at fresh 3-year lows. So that's the risk, that the monthly charts have yet to turn positive. We haven't seen a positive monthly move, so for now the charts are still a little bit questionable, but it needs to be below 6,061 for it to trigger another sell signal. If you take a look at the French CAC 40, We can see here also it has a chance of moving back above 50 on the monthly time scale. We've talked about that on other markets. Moving above 50 will be good. If we take a look at a longer term monthly view, we can see that just like we see in China, there is a possibility, of course we don't know for now, that this is actually coming back to test this breakout. This breakout that began the move in 2012 here, and we saw the market go on to record new short-term highs. I think maybe we can also look at this as being a possibility of coming back to test that long-term monthly chart breakout on the RSI. So if it holds that line right there, that green line just under 50, if it can hold, then I have to, suspect that that holding suggests that the next multi-week, multi-month movement is going to be to the upside. So that's possible, even though we see that the monthly chart, just like other markets, we are seeing the RSIs and the MACDs as of right now, because we haven't seen a monthly gain until the month turns positive at some point. We still see that the monthly charts are still giving us a sell signal, because the 3-year monthly RSI and MACDs are trading at 3-year lows. Just like other markets, take a look at the weekly, and we can see, let's go back about 5 years. Just want to show you that the weekly charts are also showing some slight improvement, depending on how you want to look at it. There's a trend line here connecting the lows in 11, the lows of 2012, into the lows of 14, and now holding there. So that seems to be constructive, you have to agree, for now. As long as we're holding on that line, that's good. And then we are coming back to test the line that's holding for now. Just draw it right there. This line has been good enough for entry here for these lows. It held here for the lows there. We held here for those lows. We held again for the lows right there. And here we did hold last year for the lows there for a couple of weeks to the upside. So if we can move back above that green line, there's a little bit of hope that the market is constructing itself after recent drop. On the daily, I think what's going on here, and this is my way of looking at it, if you take the highs, previous highs, there was a breakout, slight breakout here in November, October for this movement here. Now if you extend the same line, it becomes interesting, because you can see that the same line was a break line. The market broke through that right there, break for that break point. We've been lower since then. We had resistance on the blue line for the highs of late December, and now we are coming back to test that line. So day to day, the market needs to move above that line, in my opinion. Otherwise, if it confirms resistance, then this is still a market that is under some downside pressure. Take a look at the German market on a monthly chart, and even here we can see that in middle of last year it held the 50, which was here, and we had a 2-month rally. So that was a time not to be short. And we can see here the market has an opportunity, if it wants to choose to take that opportunity, to move back above 50 for a nice multi-week, multi-month move higher. So it depends on how and what the market wants to do here. The problem is, as of right now, we are still looking at monthly RSI at 3-year lows, and the MACDs are also trading at 3-year lows. So the risk as of right now, until we can see the month turn positive, which is a new month, give us a positive gain, we are still looking at monthly charts that are still pointing to downside possibility. Let's take a look at the Canadian market, and this chart gives us a nice view of what's going on in the market. We've had a nice move off the lows here at about 11,500. Now we are trading close to 12,000. So from 11,500 to now 12,000 and 12,750, which is a big move. But take a look at what the RSI on the weekly is doing. Take the highs. We are coming back to test this line. The last time we hit that line was in I think December here, and of course from that resistance we dropped substantially. So we are coming back to test the same line. So Here it's very simple to see that if the market is to move higher, the first thing it needs to do is take out that resistance line on the weekly. Otherwise, if we can't move above that resistance line on the weekly RSI, then clearly the next swing trade is going to be to the downside. Take a look at the daily. The daily is coming back to test the previous resistance line off the highs here in, let's call it about April of last year, 2015. There was a break point there. This break was just above 50 on the daily RSI, and so there we have it. So we broke through here in May. We haven't been back to that level since then, and the market's been stalling and finding it difficult to move above the 50 RSI on the daily. As you can see, all these resistance levels on the daily have become a problem. Let me just draw them here. So double top there in August for the highs there, and then we finally broke through here with another trend line break for the highs here. Resistance with uniform activity there on the red line and also back below 50. Resistance on the red line and back below 50, and so we are back here. So I think if we cannot move above the red line, then clearly we have to assume that, just like we've been doing the last couple of months, then the next swing trade is lower. Otherwise, if the market wants to change its behavior, then it needs to clear that well-defined line of resistance. And don't forget that the monthly chart continues to show monthly RSIs and MACDs still trading at 3-year lows. So even though the market did have a nice recovery towards the end of the month, the problem is right now, until we see the month show us a monthly gain, in other words, the month needs to have a monthly positive gain, we are still looking at the last 3 months being down. And so the risk continues to be down until we can see a positive monthly gain, and the market might have a chance of repairing. But this chart still looks bearish, and that's the problem. In fact, let's take a look at the hourly here for the Canadian market, and I think the hourly, just like the daily, is coming back to test where it's been stalling. So if you draw a line somewhere around there, we can see that this was resistance in December, resistance here late December, and again we are coming back to test that red line. So if we see resistance in the next couple of trading hours, the next day or so, on that red line, then we have to assume that the next swing trade is lower. If we take a look at the Brazilian market, we see that it is having a 3% gain on Friday, which is not shown on this chart, so it should be trading somewhere around here. But I think what's going on is it's still coming back to test the break level here. So this break level in the RSI brought the market off these levels here in December. We still have to clear that break line. And since we haven't done that, my thinking here is that even this market has yet to prove itself that it wants to move higher, because it needs to clear this break line from this most recent highs of December. Also, if we take a look at the S&P 500 right now, trading close to the highs of the day. So let me just show that. Otherwise, a full review of the S&P 500 will be done after the close. We have about 2 hours to go before the close here. But you can take a look at the S&P 500 on the daily. And for now, the one thing I do show here, just like the Brazilian market, we are coming back to test this break line. So we are coming to those break line here. We are back testing that line. If we don't move above the blue line, we stall. Also, we can also draw this another way, which is take a look at this break level here and draw a line that way. So S&P 500 doing its best to clear resistance. Otherwise, if this daily resistance cannot be cleared, then obviously around here the market is going to have to pull back first and foremost. Otherwise, watch part 1 of my US market analysis, which is going to accompany this one if you want an in-depth view of the US markets. Eric Mother, mother.com. As always, good luck, peace, and blessings. Enjoy your weekend. I am out. Mwah.